Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Kaspa, conduct machine learning based price forecast, regression analysis, accumulation strategies for Kaspa and its token KAS. None of the content is financial advice. This is the homepage of our website cryptoweeklies.com. The link on the bottom of your screen. You don't have to pay, sign up, or content with any ads. All of the content is available for all, and just not just for Kaspa, but for most of the top 100 cryptos by market cap, their machine learning based price forecast, some of the top 10 cryptos by market cap and their retirement model, regression analysis, accumulation strategy, risk based model, and estimated bull target, as well as some of the market related analytics such as how is the current risk reward ratio, what is the social sentiment in the market, what are some of the popular narratives, what is the yearly ROI, and what are some of the SMA based risk targets, what is the current heat map, and current price performance for some of the top cryptos. I'll just briefly go through it. The normalized risk score is pointing at bull market has been 47% complete based on what happened over the last bull market in 2021. Some of the narratives are most of the narratives are bullish. Overall sentiment score is at around 84. The narratives which are popular, again, Bitcoin over here, altcoins are gaining some popularity, Kaspa being one of the altcoins. Some of the other altcoins and narratives are also available over here. In terms of the performance over the last 24 hours, 7 days, 30 days, 90 days, that is also available on the website. And now briefly we'll look at Kaspa and its performance at a weekly level. This is the weekly price action for Kaspa USD, and on top of this is these are the bull market support band, 20-week simple moving average, 21-week exponential moving average. Currently the price is close to the 20-week moving average and 21-week moving average at around 15 cents. Over the last some of the last key performance periods, Kaspa has rallied but has not garnered much of the attention. You can see the price is at around 15 cents. Circulating supply is almost 90% of the max supply of around 28 billion. Tokenomics favor reduced impact of any token based inflation as we get close to the circulating supply gets close to the max supply. Impact of any new token releases on price growth versus market cap growth should be minimal. This is the price chart, this is the market cap base chart. So any growth in the market cap, let's say from here, which was early November when the market cap was at 2.7 billion, now it's 3.8 billion. So in terms of percentages, has increased by about 50%. Price also increased from 10 cents to about 15 cents. So market growth and price growth going hand in hand. In terms of some of the technical analysis, you can see this chart has this is the weekly chart, again, has been up and to the right since the token was released. Kaspa did not spend much time below the 20-week simple moving average and 21-week exponential moving average. That means for the longest time it has been in a bull run. In terms of now looking at Kaspa and its machine learning based price forecast, this is the model trend, the weekly price action based model, average weekly price based model trend on ARIMA, LSTM, and XGBoost. The output of this model first provides this the pink line, which is the directionality of the forecast. That is the price likely to go up or down. This pink line establishes that per the machine learning model, the likelihood of the price and its directionality is up. Again, this is not a price forecast but more towards what could be the directionality between now and early May of 2025 from 15 cents to about 24 cents. The bull case for Kaspa per this model at 68% or 1 standard deviation confidence is between 17 cents and about 42 cents. The bear case is between 12 cents and 15 cents. So the idea with this model is whether the market throws a bullish scenario or bearish scenario, that is to be determined by the market if the price has to go up or down. But if it were to go up, what are some of the theoretical 1 standard deviation ceilings, what are 3 theoretical 1 standard deviation floors? And if Kaspa exhibits some kind of a euphoria case between now and May, that 2 standard deviation bull case at 95 percentile confidence level is between 18 cents all the way to about 68 cents for Kaspa. A 68 cent Kaspa would, in terms of its tokenomics, if the tokenomics at around 25 billion tokens stay constant, then the market cap would still be around 20 billion. Again, not too outlandish. I know right now some of the cryptos have had a market cap. You can see this is by market cap. Most of the top 10 cryptos have market cap higher than 35 billion. Again, Tron is an exception, whereas right now Kaspa is looking at, per the market cap based ranking, at rank number 34, market cap under 4 billion. So that's where we are. And now, in terms of analyzing the regression based valuation for Kaspa, again, this is the polynomial regression function, which is on top of these weekly candles. The pink line, which is the fair value polynomial regression function, identifies an equidistant point from the bull phase and the bear phase for Kaspa's price action throughout time. And this is a non-linear model, where if the prices have a nature of exhibiting this higher highs and higher lows, then the pink line has an upward bias, whereas if the price action has continued lower highs and lower lows, the non-linearity takes over, and this fair value depreciates with time. And this is key for altcoins, because not all altcoins always go up with time. They have a prolonged bear market and short-lived bull market. Right now the fair value per the model is at around 11 cents. If you wrap one standard deviation residual on top of the fair value, which is this yellow line, similar to our machine learning based price forecast, the color codes are quite the same. The one standard deviation ceiling for Kaspa is coming in at around 16 cents. So this is the key level to watch. If the price meaningfully holds above 16 cents, then the secondary or the two standard deviation residual is at around 22 cent. A 22 cent Kaspa token would be considered as overvalued at this point, as it was back in November 2023 when the price was at around 14 cents. So that's the nature of the polynomial regression function, helps identify some of the overvaluation and undervaluation zones. And now that we have covered the regression analysis, we'll spend some time on the three accumulation models. The first is the simple moving average based accumulation model. Helps identify when the price has too far gone to the upside or downside from the 20-week simple moving average. Based on the proportional and time adjusted distance, the risk colors are assigned and risk levels are normalized between 0 and 1. I will help you understand with an example. So for example, if the hypothesis is only accumulating Kaspa and its token KAS only when the risk levels are less than 30%. So this model helps identify whenever the risks are higher than 30% and that portion is grayed out. So for example, as late as November 18th of 2024, when the risks were higher than 30%. Right now the risks are at around 26% per the model. And also if the hypothesis is again even lower risk, only less than 20% risk, that in that DCAing at that point in time, then you will find that during the middle of 2024 May, as well as early October till November of 2024, the price middle of 2024, that's where November 2024, that's where the price risk levels were less than 20%. You can use this model to extrapolate what can happen in the future as well, but again with some nuances. This is a 20-week moving average based model, so helps understand what could theoretically be a 60% risk case at around 21 cents till about a moderate target between 21 cents and 24 cents, and the lofty target between 24 cents and 25 cents. This is again one way to estimate as well, but the key finding with this is what is the risk reward ratio at around 26%. That means 74% reward. The second model is quite similar to the regression model. You saw that at a weekly candle based level, this is applied at a daily level, and based on the proportional and time adjusted difference between the fair value regression line, the risk levels are calculated for Kaspa. Again, they do a good job of identifying the bottoms, not that great of a job of identifying the tops. Over here at November 2023, the risk levels per this model was 70%, but if you compare that with the SMA model, November 2023, you would find the risk levels were at around 100%. So that's why we have a composite of all the models at the end to estimate what could be a bull case scenario for Kaspa. Per the DCA model, which is the regression based model, the accumulation strategy, again the same thing is again DCAing at sufficiently low risk. Let's say again the same hypothesis that DCAing between 0 and 0.2 or 20% risk. That's where this model identifies where how the price is doing with respect to the risk levels. Right now per this model, the risk levels are slightly higher at around between 40 and 50%. and this model again says that anything price action anything above 15 cents till about 21 cents is moderate risk, and between 22 cents and 24 cents is high risk for Kaspa at this point in time. Again, the last but not the least is the time weighted average price model. The blue line represents the time weighted average price. Whenever the price action is close to this blue line, that represents as a lower risk levels, and that's how the color codes are assigned. And as Kaspa has not spent much time below 20-week moving average, it has not checked with the time weighted average price for almost entirety of its existence. Right now the risk levels are kind of down at around 62%, and as a composite of all the three risk level, we have an estimated bull run target for Kaspa. Again, we have this for most of the top 100 cryptos by market cap. 15 cents Kaspa representing 52% DCA risk, 63% time weighted average price risk, and 27% simple moving average based risk. Composite risk or a weighted risk skewed heavily towards the regression risk is at around 50%. That means the estimated bull run peak is at around 28 cents at this point in time, and representing a reward of about 1.9x. And with this, I would like to conclude the video with just last but not the least is the analysis related to the machine learning based price forecast between 17 cents till about 42 cents. That still is the most likely price action per the models if the market stays bullish, and if there is a euphoria case, the price action between 18 cents and about 68 cents makes the most sense at this point in time. So hope you enjoyed the content. If you did, please subscribe to the channel, so give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.